Hi, everyone. This week, we'll take a look at how resilient is the U.S. stock market despite the heightened geopolitical risk and why is oil down?
All right, and our stock of the week this week is Boeing, which is currently trading at $199, has a cash flow baseline value according to the IVoT Forecaster of $88, so selling at a big premium. And I will say the stock return has only been 3% compounded over the last 5 years. So what do we see that's going to help this thing get more interesting for investors?
Welcome to IVoT Eye on Investing, a discussion of the markets and investing from a long-term fundamental perspective, hosted weekly by IVoT Academy. I'm your host, Ed Butowsky. We are joined by our two esteemed IVoT experts, market analyst Andrew Tang and equity analyst Emile Westergaard. Welcome, Andrew. Welcome, Emile.
Thanks
Thanks,
for
Ed.
having us. Yeah.
So Andrew, why don't you kick off? I mean, we have a lot of things going on in the world today with Iran and Israel and the markets and oil prices. Why don't you give us your perspective on where things are and where they're going?
Yeah, in most cases, for previous war that we have experienced, oil prices tend to go up because due to the unpredictability of supply, especially when the Middle East it's involved. Well, this time it's different because we have ample supply, and also there is an assumption that the geopolitical risk is somewhat contained. There also an assumption of limited U.S. involvement in the ongoing conflict. And from the investor's perspective, as well as many businesses and Wall Street analysts' perspective, this war is somewhat contained. We see limited escalation when it comes to retaliation from Iran. When we also see a forewarning were given to both sides before the attack. So what's different is that no lives were lost. So in my view, the retaliation from Iran attacking the U.S. base, it was more of a saving face event so that it can show that, hey, Iran here, we can also retaliate. We're not just going to sit there and do nothing. And therefore, the ongoing effort of the U.S. trying to negotiate a peace deal right after visiting, Saudi Arabia, and in my view, it is all quite well, despite of all the conflict that is going on. So the focus seems to be on inflation, and it seems to be more focused right back on the Fed, with June no rate hike and the increased probability of a July FOMC meeting. The rate reduction is going to restart, not rate hike. And so therefore, the market is somewhat focused on different areas versus war, and the resilience is shining through.
That
Yeah, I mean,
that's
it's amazing. So it's amazing that implied volatility is actually down since the beginning of the war. I mean, the options market has actually reduced the risk in the market since the war started, which, I wonder historically, Andrew, is there any precedent for the market being so sanguine about war between two relatively major countries? Well, three in this case. I mean, Israel, US, and Iran. This is not just, a sidelight thing. I mean, I don't know, just kind of mind blowing to me.
Ed, you were saying?
No, I was just going to comment on where oil prices have gone down, just like Emile was saying, implied volatility is low. Um, it's almost like we're just playing a role. Like this was already laid out, and they're just playing the role right now.
Yeah.
Um, and you know, and Iran is definitely much weaker today than they were previously, but I don't think they were as strong as people had feared. So I
Yeah.
think that's one of the takeaways from this, and that Israel, they're just amazing.
And
Yeah.
does this also signal that the role of oil in the global economy is changing? That it's not as important as it used to be? I mean, in other words, you said there's
Yeah.
supply out there.
Yeah.
Clearly we have a lot of alternative energy technology being developed around the world. So does this mean that in a way the Middle East is going to become in a way less of a hotspot because oil becomes less of a focal point of global, I don't know, geopolitical issues?
That's for sure is happening because over the last decade, you have seen the effort from the Middle East to quickly, not quickly, I mean to really put a lot of effort and resource behind diversifying their economy to shift away from a one-trick pony, which is all energy, into other financial and tech sectors. This effort has been ongoing for the last decade, and this particular year, we have seen a whole lot of promises that were made from countries around the world, especially in the Middle East, to really increase their spend on AI infrastructure and also to greatly diversify their economies.
And if you think about it, the world produces 130 million barrels of oil a day. The United States is the largest producer of oil. A lot of people don't realize that, but the United States produces about 13 million barrels a day.
Yeah. And we consume about 10, roughly about 10. And so with an economic slowdown, that is, if you look at, for example, if you look at the probability of US falling into recession into the next 3 to 4 months, we talked about this last week, is that it's still quite elevated. It's above 80% probability of US falling into recession in the next 3 to 4 months. And that's largely due to tariffs, the uncertainty of how tariffs are going to affect prices. But so far, if you take a look at the CPI and inflation data in PCE data, it's not pointing to a great deal of inflation at all. So this could be a combination of events. The suppliers and businesses, they're absorbing, some of that change, the price adjustments, and also perhaps, we're still working on inventory. So the ongoing inflation that is still largely remain to be seen, and that's exactly the reason why the Federal Reserve did not lower rates in June.
What do you make about the uh, back and forth between Powell and Trump?
Yeah, oh, the name calling is just silly, it's childish. Uh, but we are seeing, well, it's obvious, there's only 4 more meetings remaining for 2025, and it is still pointing to 2 rate cuts for the rest of the year. So looking forward, we still see that there's going to be 2 rate cuts for this year, and then carrying over into next year. Hopefully, the cost of capital will start coming down, and that will stabilize growth. Otherwise, we could see more and more problems.
So, Emile, why don't you take us over to Boeing and take us through the your work?
Yeah, so we're going to take a look at Boeing today using our IVoT Forecaster. So let me just set us up here in person. So we will go to the platform, and the platform launch is we're ticking off the seconds or the days until the platform launch. It's coming over the next 2 weeks, and everyone will be able to join and start using our tools and our training. If again, here's the training modules. I go into the toolbox and I go into our investment tools, and we have here a menu of companies, but this is our Boeing tool, which we're going to discuss today. So Boeing is currently trading at $200. It's got $150 billion market cap. And it just to give you context for the stock itself, the stock is, up 3% compounded, as I mentioned at the introduction, over the last 5 years, which is pretty meager returns. And that is really, obviously not going to work for investors. The question is what's going to happen to accelerate that. I think the issue from a fundamental perspective is it's trading at $200, and right now the cash flow value is only $81 per share. And obviously there's been a kind of a cavalcade of problems at Boeing over the last 10 years, going back to some really honestly interesting stuff that we could spend a long time discussing, which I think gets into kind of corporate culture. I think you really have to go back to Boeing to understand the company from my perspective to around 2000 when they moved their corporate headquarters from Seattle to Chicago. And they kind of lost touch from what I can see with the engineering part of the company. It became kind of taken over by corporate, and engineering lost, I think, a lot of the ear of corporate. And that's where you started to see the company fall apart from a quality perspective. Anyway, I'm not going to get into that today, but that's an interesting topic. Maybe we can discuss it at the end. But in this case, with an $81 cash flow value, granted up from $9 a year ago. Now think about that. Last year, their cash flow was only $320 million. It's currently sitting at $830 million. So that's better, but still doesn't really warrant an investment. They need to grow that. Now, they grew sales at 17%, and they did see some improvement in their cost structure in the last quarter. So we can, just for getting kind of a picture of how you can use our tools, if I imply 17% growth for the next 3 years, this is a compounded growth into 2028. That would get you up to 110, still not a buy, right? Obviously, you're paying $200 a share. If they were able to continue to pick up 100 basis points a year, that would take you to 84.6, if I'm right here, would be their cost structure. What would that do to the price target? That would take you all the way up to $208. So there are two ways we can talk about this, and then I'll open this to discussion, which is clearly if it's worth 81 on cash flow and you have to pay 200, then you know, to have a return, you have to believe in significant cash flow in the future, growth. And so the question is, what's going to drive that? And then the second thing is, you know, what's going on in the company right now. Again, they had a pretty good year-over-year growth. They have a backlog. These are things that we would have to go much deeper into, I think, to really do a full fundamental analysis. But I'll leave it at that. And then let's talk about what our thoughts are on Boeing. Oh, let me say one other thing before we go there. Boeing is not one company. You know, all these companies, and we have level 2 tools for all of our companies where you can look at the divisions. Now, Boeing has its consumer travel division, which has been losing money, you know, lost $500 million in the most recent quarter. So actually, if you extract the losses from the consumer business, the defense business, and what they call their services business is worth about $150 a share. So that's another thing that could make it look more interesting as an investment. If they can turn around the consumer business and make it profitable a bit, again, you know, they've been really struggling with their commitment to the plane designs that they've had that have struggled to get to market. So I'll leave it at that. But you know, those are all kind of the variables as I see it in the immediate. Obviously, defense is a big part of their business, so that's another thing. And actually, I'm going to say one more thing. They only spend 5% on R&D, which I looked at and I was kind of shocked at how little a company with so much technology and big defense contracts that are tech-based only spends 5% of revenues on R&D. I kind of think that, you know, for a company like this, they should be spending at least 10% on R&D. And maybe that's something, if I was a shareholder or an activist, I'd be going to the management saying, hey, in this world of fast changing tech, how can you be spending such a little amount and be the global leader in air tech? Anyway, well,
yeah, those are interesting points. You know, maybe AI have something to do with it. But I'd like to, you know, talk about what I was talking to you about before, is that namely in Europe, you know, since you know, last year's election, you know, with the U.S. commenting that they will be less involved in defense spending. So that has prompted Europe to increase their defense spending from 2% of the GDP to 5%. So that's a huge area for defense spending, and Boeing is going to be one of the players that's going to be benefiting from that. And as the continued economic indicator to show that the service sector and revenge travel, it's still happening. It is absolutely still happening. So this time around, we're seeing that in the combination with stable oil prices, we see that people are traveling quite a bit for business, for pleasure. Um, we see that both sides are quite resilient and also quite robust there. Airfare is not exactly going up. You can still find good deals, and innovation, really helps consumer to find the really good deals out there as well. So it's a combination of events that we believe that the assumption of growth is going to continue for Boeing.
But let me just say, actually, sorry, Ed, just interesting you mentioned air travel, because
Mhm.
I was reading about, because of all of the immigration stuff in the US and kind of the heightened border control, that international travel to the US is down 20 to 30%. It's really hitting New York City hard. So that's isn't that a bit of a counter to what you're saying, Andrew?
Yeah, they're not going coming to the US, but they're going somewhere else,
Yeah.
but they still have to fly on planes, unfortunately.
But
So
but neither one of those has anything to do with earnings to Boeing. Um, Boeing will make their money when they sell airplanes, not when people travel on those planes.
that's true. So the pledge for orders for jets from airlines around the world, it's increasing, especially for the high-end jumbo jets. That, for example, Middle East, you can see that after President Trump have visited UAE and the Middle East, they also increased their orders. And these are not small planes; these are huge orders. And just from that, you will be able to see the growth. And then on top of that, you add the defense spending on top of that, and then you can see the growth assumption for Boeing that they're sitting quite well.
I think we've been talking, and just for those of you watching, we're talking about doing some more concentrated shows on a company where we'd spend a full hour and get to go through the backlog of orders. Because a lot of what you're saying, Ed, first of all, it's true, right? Obviously, there is a correlation. There must be between the extent of global travel and the number of planes that are ordered, but maybe how high is that correlation is one thing. And then Boeing publishes its backlog of orders every quarter, so we can track kind of future sales growth expectations to those backlogs. That's another thing we can do as analysts, and that's again one of the things we train people to do on our platform with our tools and training and webinars. Yep.
All right. Well, I want to thank you for watching IVoT Eye on Investing. IVoT's sophisticated yet simple tools equip you to analyze, forecast, and manage your financial future, including budgeting, investments, credit management, wealth planning, and business management. Please subscribe to our YouTube channel and click on the link in the description to register for early access to the platform opening soon, which includes access to our powerful IVoT forecasters and fundamental investment training. And just as a footnote for those of you watching, today is June 24th. So if you're watching this a week from now, then the platform is open. So you can go to the platform and register. And so thank you very much. And we'll see you next week for another IVoT Academy show.
See you next time.